The Chief Strategic Officer of T3Live.com. It is Friday. It's been a long week. We had our Christmas party last night, so I apologize for it being a little late today. As far as the futures, I think we're up about 7-8 handles, about 70 points in the Dow futures. Kind of like a deja vu to yesterday. The question is whether or not it holds. Everyone was a bit frustrated if you tried to play a bounce yesterday and you bought anything on the open, you lost money. A lot of guys that actually shorted the up open, they had some success. So the question is, will that be the same game today? You do have quadruple witching. You have to be a bit more careful. The moves are a little bit more volatile, and some of them don't make sense because the forces at will want to pin things at some major strikes. So make sure whatever you're trading, you know what that strike is. As far as the spiders, take a quick look. You will see that yesterday again, we opened up, hit the moving averages, and closed lower. I would say on the spiders, I think we're ex-dividend today, so it might be a bit tricky. You have resistance around 123, and then obviously yesterday's low at this 122 area. And again, overall this whole picture, as dreary as it looks, still, on a macro level is acting fine. We had that huge move from the October low, went to 1292, corrected a little bit more than people would have wanted, had a nice move right back to resistance, and then here we are. And it feels, though, that a lot of the major stocks are a bit broken. A lot of the sectors are not acting strong, so it kind of doesn't give a clear-cut picture of how weak the market feels based on the type of pullback that we've had. But it is what it is. As far as today, I guess see what holds up, what goes negative, see if weakness really comes in. It's not a day to do a lot. Because again, quadruple witching is one of those days where things don't make as much sense as they should. If you look at Apple, I was saying yesterday in the recap, I do think this pattern is getting a bit more bearish. Yesterday, it opened up, went negative. It's near the lows. I would say, I guess if you had to be long versus this 378.31. But if it happens to start breaking yesterday's low, you're going to see a move down to this trend line in the 200-day, which is around 368. So, that could be a $10 short if it's conducive to what we're looking at. As far as Amazon, you had a little bit of a follow through to that big reversal at this major support. But again, look what it did. It came into support. This is what we drew, I think, in yesterday's morning call. In a lot of resistance right there. It came off, that level. So I guess, if some people might want to short it, you short it versus yesterday's high. And then, there's a big range here, so you just have to be a bit more careful. As far as Google, it's up a bit. I still like this stock a lot for next year. But overall, on a micro basis, if the market gets weak, it is prone to breaking this upper level. And you still could see 592 in the 50-day, which would be a lot stronger than the overall market. But again, the question is, can you hold it through that? So as far as an active trader, if it starts to break this level, maybe look for a micro short or at least just sell and then see where we could buy back. You have 610 here and then you have 592. But again, if it doesn't break that, then you just know how strong this thing is and it can continue. As far as gold, it's up this morning on some inflation data. It's grasping to hold yesterday's low. You have the 200-day moving average right here, which is around 156.50, 157. That would be the resistance. Typically when gold breaks the 200-day, obviously it's always a negative sign technically, but for gold they like to get everyone out. So if it grabs the 200-day again, maybe it bounces, but if it doesn't grab this 200-day, it doesn't get above 158, you're going to see that gold could have this move down to this lower level at some point going into the first quarter of next year. As far as RIM, horrible earnings again. Stock's been a disaster. Only time it ever goes up is when the takeover rumors happen, and obviously, those haven't come to fruition. It's down well at the lows. I can't even put a monthly chart up and show you how bad RIM is. We've been saying sell every rally. Laz has been a RIM bear for such a long time. Congrats to him. I guess if you go back, look at this. You got to go back years. It's breaking the support that was in place from 2004. Just shows you how cycles change and how you have to move around. But I guess today it's worth a look. It's down $1, and maybe they price it in for a trade. But I would just trade a level versus level. Last I looked, I think it was actually last night, it was at $14. So maybe it's priced in it somewhat. It can go positive. It could be decent for a trade, but I wouldn't really hang your hat on that. As far as the financials, you look at something like Goldman Sachs, technically not looking really good on the daily. It's given us a lot of clues. This was the last time it broke that mini uptrend. Did it again right here around 99, closed in the dead lows. It's up a little bit. I guess traded long versus yesterday's low of 91.90, but if it starts to break 91.90, you're talking about the pivot low and then the other low, and that just shows you an unhealthy market. Lastly, the OAHs, it's been just bleeding and bleeding. I've been holding it longer than I would have held it as an active trader, but as someone who had a thesis, in TV saying, you have to be tier 1 versus 108, I'm sticking with it. That's what a compliance department makes you do, which is good. It still looks like the pattern's building. It hasn't come to fruition yet. That's a problem when you anticipate patterns. It can continue to go, for a while until it triggers. That's why as a technician, you always like to buy as it's working because it's showing you that the pattern's actually triggering. Right now it's just a tier 1. It closed in the dead lows. I guess my stop's 108, so if we get through there, I'll be out of it, and then we'll revisit this trade at some point next year. Fundamentals, everyone's saying that this group is rock solid. A lot of individuals out there are saying that you still make a ton of money with oil above 90, and we're at 95, so it's a bit emotional. So for those that have that long-term thesis in the ags or in the refiners, just know that's what it is. It's a short-term trade, not really showing us anything yet. So just stay on your toes, trade within your parameters. It's Friday. It's been a long week. I think guys, had a good week. The most I think performance has been shorting. High beta tech. It seems like growth right now is a sell. So that's giving us some indications that 2012, Europe could be a bit quiet. It could be in that recession camp. There's still some things to look at in the U.S. economy. China is still a question mark as far as whether it's going to have a soft or a hard landing. And the more people I talk to, the more they're talking about a hard landing and trouble there. So just preservation of capital, stay within your means, don't do too much. Let's keep that sniper approach going into New Year's, make a little bit of money, and then we'll have a little bit more clarity as the ball drops and we enter 2012. So, tune into the radio. I don't think there's going to be a lot of people on. Most people were out pretty late last night. That's what happens on holiday parties. I'll try and guide you through. I have a Bloomberg 11:15, so I'll be on until about 10:30. So just keep it tight, make a little bit of money, and we'll try and figure it out together. Have a great morning. Scott Redler, T3 Live, The Morning Call.